Good morning and welcome to Trading with Larry. It's Larry Benedict here with Eric Shamalov coming to you live Monday morning after a nice weekend. Hope all had a good weekend, nice and relaxing in South Florida, a little warm, but overall nice. I hope you had a good weekend too, Eric. Back at it this morning and same kind of scenario, market up. Looking at the higher end of the range on S&P right now at 6,020 on the futures, pretty much 1.5% from an all-time high. So I would think that that's pretty much in range, barring anything crazy happening, which nothing seems to be taken as crazy at all. So markets are here. Bond yields backed up off of Friday's employment number. We didn't come to you guys Friday. I messed up on Thursday thinking we were coming to you Friday, but I forgot every Friday here we do the Ask Me Anything weekly recap of our trading, subscriber thoughts and questions that come in. So I do that on Friday. So we didn't really get to talk about the unemployment number, non-farm payroll. You were spot on as always, and the number beat.
That's why you have me. That's why you have me here.
Well, I have you as my resident bull. Oh, always looking at the positive. I'm an old school trader, always looking at the negative. There he
You see
is.
how the bull always overtakes the bear?
Yep, it looks pretty good. But non-farm on Friday beat the number at 140. I'm still not understanding how these numbers are coming in so good when all of the numbers that make up the number, whether it be weekly jobless claims or JOLTS or ADP or any of these numbers, were significantly weaker. So markets did not have a negative reaction to the potential weaker number, and then the number came in stronger, and we had a pretty huge up day on Friday. I think it's an amazing economy that I'm not seeing on the underbelly. I'm seeing a little bit of a slowdown where I am. I don't know if you have it in housing in general. It doesn't seem at all to be on fire. I know, one thing I look at a little bit is like, but this is for like sort of the ultra wealthy, but New York Hamptons rentals are down significantly, and stuff is just sitting on the market for summer rental, which I don't know what it actually means. I mean, it probably means slowdown, but maybe people are exiting away from, just sitting in a summer house and they're traveling abroad or whatever they're doing. But I'm seeing things that are showing me a slowdown, and the consumer was very, very nervous a month ago, has gone from extremely nervous to extremely exuberant in literally a month and a half. So, we talked about this. Some stuff that I'm picking up is massive retail buying in the market over the last couple of weeks, for sure, maybe a month, all retail. We talked about that a little bit on Thursday, I think, with Robinhood, which has been running up, thinking it was going to be added to the S&P, and it was not added. So the stock is a little bit lower, but listen, eventually it will be added to the S&P because of the market cap, and the market cap is significant, and it probably belongs in the S&P. It is really a barometer of the retail market, what retail is doing and how much they're playing in the market. And, no matter what happens, even if we go into a significant bear market here, retail is here to stay for the duration of time because of the fact that they can execute orders on their phone. It's almost like, I hate to use the word, and I really never say it, even though I call it controlled risk taking, but it's gambling. They're able to gamble on their phones rather than betting on the NBA game last night. They're betting on zero DTE option for the day. So, they're using this as a gambling tool. It's got access to everything at your fingertips. So it's a different market in the retail, which used to be what we would prey on, as a hedge fund manager and as a prop trader. Now,
Are now preying on us, right?
yeah, well, now it controls the day. And what's happened is the Citadels, Jane Streets, and all these Virtus, these algorithmic firms are just going, rather than going against them, which they originally were for years and years and years, they owned them. Um, After GameStop happened, they now are on the side of retail. So when they see tons of retail orders coming in, they're buying, not selling to retail. So they
That
push.
that's a great point right there. What that point you just made, I think nails it right on the head of how the market changed right after COVID. I think now the Jane Streets and Citadels are joining them. They
No,
see the party. They see
they're
the
front
party, and
running.
they're like, "Hey, let's provide the booze."
Yeah, they're front running the orders. They're running in front. They're able to, you know, basically have an advantage getting in. They push the stocks. They make the retail buy a little bit higher. They flip to the retail, and then they continually do that. And that controls the day over day trading. And it's funny. It's weird because growing up in trading for me for years, always the money was made on the downside. Even if we had one or two down moves in an entire year, we made more money on those one or two down moves than we ever made on any up moves. And now it's like, listen, it's not true this year because we sold off 30%. You could add career, you could have really took care of your career on that down move. We did very, very well. Did a lot of trades during that period. Again, still not averaging trades, sitting in some losing trades, but overall, we were able to make money for years on the downside. Volatility would tick up, it would be better for trading. Like, it's funny because this environment is horrible for trading, which is what these people are doing. So in a way, they're almost hurting themselves. And I don't know if you remember, I was thinking about it on the way into work, and I don't know if you were trading during the flash crash. What year was the flash crash? Hold on, I
I
got to
think it
look it
was
up.
like early 2010s, no, something
I
like
think
that.
it was 2010, exactly.
Yeah.
Okay. The market in February, May 6, 2010, at 2:45, the market literally crashed. Okay. Systems blew up. The world blew up. Oil moved like $30 in 2 minutes. Everything was going crazy. Stocks were pricing down. I would tell you that my P&L that day had $100 million swing. 100 million intraday. So it was not pretty, but it wasn't real. That's what's so crazy. Like, the prices that were printing were not real. They were printing like Procter and Gamble down $100. Stuff that couldn't have happened. Um, the P&L swung down. I think people were out of business. I mean, literally out of business. We probably had an 8% hit to the low, which was close, probably 100 million, 80 million, and then we ended flatter up on the day. It was absolutely incredible in an hour and 15 minutes. But I think people out there don't know what can happen. It's a market right now that is so complacent, price for perfection. And listen, maybe we are in perfection. I doubt it. I think that it's good for me, and for my subscribers here, because I think there's going to be set up really, really good opportunity to trade levels up in here that are going to last for a while. Um, Potentially, we will not make a new high here, and if we don't make a new high, we could go down significantly. And I think, I mean, this is being in this for 40 years, this is the fastest that I think I've ever seen sentiment swing to panic and fear. How about this? I don't remember the date, but it was the Sunday. It was the Friday in April. Okay. Jim Cramer came on and said the market was going to crash. Okay, over the weekend. I mean, that's how crazy this got. I mean, people were thinking the market's going to crash and this and that. And literally, it's what, a month and a half later, and everything is fine and nothing matters. I mean, what do you think it is that's changed? I mean, bond prices haven't changed. They've actually gotten worse. The currency has gotten much worse. um, Gold's a zero in these levels, and oil is up probably $8-10 from the low. So everything out there that's external clues to the market, to me, is looking really, really iffy. We're at 451 on the 10 year. The 30 year is at 5%. I mean, that seems like it's going higher. I mean, what levels? I mean, listen, I know we're in seasonality, but what levels really kick in here on anything outside the market to make the market go down? And you'll probably say nothing, which leads me to believe that this could be like a bubble type of scenario that people were calling me in Palantir at $70, freaking out. Now it's like 130, 120. I mean, this is all in a month. It's doubled in price. I mean,
Yeah,
that's
because
just one of
I,
many.
everybody's trying to price in the right risk, and I don't think anybody had a good understanding of that. It felt like in the beginning, everyone was pricing in only the negative side. You
Well, what's the
know,
what's the positive side? That's
well, everyone thought tariffs are going to create inflation and cause job loss. Now, that may be the case down the line, but
dude,
it's certainly not the case right now. You
but
can
we're
see it
one
in
month.
the.
We're 1 month into tariffs that no one even knows what they are. Like he hasn't decided
I
anything.
don't think we're just 1 month. There's a lot. There's a lot there. It's not just like
What do you
when
mean?
the light switch went on and off. There's the preparation for it and the recalibration of
The
all the.
preparation. There couldn't be any preparation. He got elected in the middle of January. So what kind of preparation you're talking
I
about?
believe even beyond that, he was running on tariffs. The world knew he was going to tariff. So
No, I
I would go
mean,
so far as to say when he got elected, everybody was should have been
all right. I'm
kind of
calling.
like,
I'm calling it our first time out of the segment. Okay, I'm calling the time
yeah,
out. Okay, yeah. Okay, let me tell you what the S&P, the day he had Liberation Day, was trading at 5,900. Okay, in the aftermarket, thinking that they were only putting 10% tariffs across the board, and then he went with some wild thing, and the market dropped 200 spoo points or more. You remember that day pretty well. Okay. So
how can I
obviously,
forget?
it couldn't have been in the market too much that he was going to do any kind of tariffs that were legitimate. And I had a friend call me every day. Oh, he's going to do it. He had the taco trade before the taco trade. He was calling me, he's going to chicken out. He's not going to do it. And the funny thing is, he did it, and he did it to a high level. And then what happened was the market had a very adverse reaction to it, obviously, as we sold off 30% Nasdaq, over 20% in S&P, and then the administration, Besson, etc., panicked, told him to back down. He listened, and he paused. He's paused these tariffs. I don't know what's happening. When is the next tariff? July 5th, or is it in June? Like what? When is
Well, look, the next big thing is going to be what's happening in London between the U.S. and China. So let's see what that's going to be. I think within 24 hours we'll know. But like
But what
stocks
is
like
that going to be? What is that
are
going to be?
rallying here pre-market. So I think the market is positioned for some sort of incrementally positive news. But I think the market got here. Where did the market go? Ultimately, it kind of flatlined. If you went to sleep on January 1st and just woke up, yeah, if you went to sleep on January 1st and just woke up, you'd think nothing
Well,
happened. And That's the market trying to price in, you know, they at first they priced in just the negative side of things. Everybody from the taxi driver to the big portfolio manager was saying the same thing. Tariffs are negative, they're going to cause this and they're going to cause that, and we haven't seen that. Now everybody's trying to look for positive signs because the market's back up. So the market is like 4D chess, it chooses what to focus on when it wants to. Right now it's choosing to focus on some momentum. And you mentioned like the Citadels and Jane Streets of the world. I think a lot of this is psychological too. You had a lot of news events. The market would gap up. People would walk into the door at 9:30, and they would be like, "Hey, the market is up 3%. This is a generational buying opportunity." And they pile in even more. The Citadels and Jane Street see this. They're like, "Hey, the party's on. Let's not stop it." And it just creates momentum. So
Well,
I think a lot of this is psychological. A lot of this is the bears only pricing in the negative side of stuff, right? Not looking at, I mean, the whole narrative
there
of
are times.
inflation is there.
Who's bear? What bear is there? There's no bear.
What are
Nobody.
you talking about? Everybody got bearish. You ask the taxi driver or the big portfolio manager, tell
Nobody
me what's going to
sold,
happen
dude.
from tariffs. Everybody was like, bad. Everything is going to be bad. The market is going to crash. And, you know,
Okay, maybe you're saying that's true, and I doubt it. Okay, let me ask you a question. Who sold anything? I live in a neighborhood with 1,400 homes, of
yeah,
which
retail didn't sell anything. That's
nobody
100. The
sold.
only
The
people that
taxi
sold
driver
were head.
didn't sell. He might have told you he was bearish. He was frozen. He was a frozen rope. Okay, he didn't do anything. Nobody sold a share of stock. So the only people, what happened here is maybe some big PMs adjusted portfolios down on the low, but it's very doubtful. This is all hedge fund related. Okay, that's why hedge funds are not having a great year this year, and macro is having a really poor year from what I'm gathering. I could get some, maybe for the next podcast, I'll have some hedge fund numbers. I'm going to get some hedge fund numbers from the
We
big
pulled those up
four,
a few weeks ago. Yeah, very poor performance. Quantitative funds poor.
except
Unbelievably,
AQR.
the only bright spot has been discretionary macro trading, which is unbelievable because they usually kind of suck.
Yeah, I don't know. I gotta go look at that. I'm not 100% sure, but really, in this mindset, no retail sold. They cried, but they didn't sell. They were crying to me, "Oh my God, my portfolio's down. I got to delay retirement." Literally, people were like, I can't retire. I mean, and then literally a 30% move and they can retire again. Um, I don't know. You're
Now, at
talking
some point,
about,
they're not going to get bailed out like this. But once again, retail proves, that
retail is never, listen, trading retail could be right. Regular retail cannot be right over. Yeah, they caught an anomaly of a 50% move in the market over the last 2 years, but over the last 20 years, they're never right. Okay. And the market always comes back to squash them. This is a different environment. So, this environment, they're able to buy 7 stocks and get rich. Okay. And it's been this way.
right.
Basically, it was the Fang for a couple of years, and then Fang turned out of favor. A couple of those stocks got out of favor, and now it's the Mag Seven. And what's funny is I don't think Netflix is in any of that stuff, and I don't know. So, and that's performed really well. That's your favorite stock, but
Wow.
but overall, looking at stuff. I mean, I listen. I'm not sure what's going on. I mean, you're saying they're having a meeting in London. So what? They're having a meeting in London. How many more meetings they're going to have? This is not high stakes, high level meeting. I mean, they're going to talk about whatever they talk about. They're going to formulate a plan. Listen, they met in Geneva, okay, for 2 days, of which one day they walked out of a meeting, and then the second day they said they had a deal. Okay, that was what was coming out originally. They have a deal. Okay. The first time around, it took a year to get a deal. And my question is, let's fast forward. Let's say we get a great deal, biggest deal, big beautiful deal. Why is that bullish? Like what makes that so bullish? Why is that so good? That and the thing is, right now China's at 25% tariffs plus another 20. So they're at 45. Okay? What's going to be a let's just discuss this for a second. What's a big beautiful deal? What are we going to tariff them at? Back at 25? Where we've always been? Like what's the big beautiful deal that oh, I know they're going to buy natural resources or whatever you say they're going to buy. They're not. They're not doing anything. They're going to slow play this deal. They've already gone 3 or 4 months already. Okay, and before you turn around, whatever they sign, they're not going to honor the same way they didn't honor the last time. So I'm not sure what I think. I'm hoping for a bear case that they do a deal because I think after that, what is so positive? What's going to be so good about the deal? That's what I don't understand. What can they do to change the United States of America? Like, just tell me what can they do?
I mean, I hear your point, but I mean, the market knows this, right? Okay, it could be a 25%, it could be a 50, whatever it
Fifth,
is.
there is no way that they're signing
Let me
any
ask
deal.
you a question. Let's say there's a stall in the China talks in London. Right? I think you're like the way we're talking. It's um, we're almost like accepting that it's going to be a good outcome, right? Because the market is up. Well, let's say it's a bad outcome. Do you think the market is just going to crash
No,
10%? No.
no,
So then, if
no,
that's the case, so if
because they're
that's the
going
case,
to
maybe tariffs really don't matter, which is
no
exactly
because
what I've been
they're
saying from the beginning. I don't think they really.
oh they
I think there's
matter.
something else in the market that is driving things along, and all this tariff stuff is just kind of
Well, let me shift you for a second. Then why is the king dollar so weak? Why is king
that
dollar
is yeah,
so
that's
weak?
an elephant in the room. And by the way, I think the 30 year is going to go even higher, right? I'm thinking to add to my short today. I like the technical pattern. The employment number got rates on the 30 off their low. I think eventually what's going to get the market down is not going to be so much tariffs as much as it's going to be the bond market.
What? Let me ask you this: what's the 50-year average on the stock market? 7%, 8% at the most. Like, why
Yeah,
wouldn't
like
you take?
9%, something like that.
No, I don't think it's even that high. You got to go. We'll have Touchdown T, who's not here today, our crack analyst. I'm going to have him do a 50-year, or let's do a 70-year return. Let's go back to like 1920. Okay. We'll do 100-year return on the market. And I'll bet you it's not over 8. Right now, you can get 5% on a 30-year. You can get 5% on municipal bonds that are triple tax free, which is like a 7.5, 8%. You're getting what the market's doing. You don't need the stock market. Yields are high. I mean, they're great. I mean, think about where we were 2 years ago, 3 years ago, they were 1%. You couldn't get anything on your money. Now you can retire out, buy 20% equities and put 80% in bonds and try to make, you're going to make 8% all day long. Like, what do you need the market for? Like, you're all bull nation, and the S&P is up 1% for the year, and it's
I'm
not
not,
gonna,
I'm
and
not
it's
that
not going
bullish.
to end up this year. Not going
I'm
to
not
end up.
that, yeah, I'm not that bullish. I just kind of recognize the fact that the market is, it's like, there's certain factors that dominate at certain times, and it feels like the market can't walk and chew gum at the same time. It's very myopic in the short term. Like it'll just focus on some stupid narrative, and then if that narrative breaks, they'll focus on the fact that it broke, and revert everything the other way, and then get stuck, and then look for the next headline, and then whatever. It's myopic. It's almost like childish. That's how I see the market, the stock market. It's very emotional. and there's something looming in the background. So I'm not that bullish in the long term. I think at the end of the year, once all these treasuries are going to kind of expire, and we're going to see, is the world going to keep buying those treasuries? Are they going to roll those treasuries over or not?
Who's the
I think
world?
that's
The
the big
world's net seller of U.S.
question.
Treasury.
Sellers. So I don't know.
Yeah, but it
I don't
doesn't have
know.
any impact on the market. We're at high yield basically of the year right now.
Right. So when rates hit some sort of threshold, some sort of psychological, that stupid psychological elusive threshold that nobody knows what it is, and as soon as the market reverts its attention to that, then we'll see. I just don't think right now the market cares at all, but they will.
Yeah,
Just
you
not
know what,
right.
dude? If we end down 70 today, you'll come in tomorrow being like, oh,
I'll
yeah,
be Oh
whatever.
yeah, I know what you're saying. I'll
So,
be bearish.
so,
I got
you
gotcha.
just need one lower day to get it going. That's why right now I think it's important for people that are with me to realize we're not averaging any of our trades. We could get twice as big here if we want. I think it's a good level, but I want to wait to see that we're going to fail off these levels. But like looking at everything across the board, like I have a FX trading product and currency wizard, and we haven't traded in a while. I owe a trade. I just don't see a trade that is surfacing. I mean, if you put a gun
Yeah,
to my
because you're
head and
seeing,
made me
because we're
make
seeing, yeah, 'cause we're seeing rates go up, and usually the dollar's going to go up with that, right? But it hasn't been, and the euro's already really strong. So it's like there's almost like, what do you do? It's a confusing thing, and maybe there is no trade.
no, there's not a trade for this moment. I mean, there's been, it's interesting. The trade that's really kind of apparent is that long rates are going higher. Um, Short rates are stable, and long rates are higher. And you know, we're at 452 on the 10 year, which 460 was the high on the last go round. My crack analyst Thomas just came up with the 100-year S&P total return is 9.9, but the real return is 6.69. So the bottom line is, right now it's, you could just buy bonds. I just see that as, probably a less risky trade. And stuff is really looking inflationary to me right now, like oil prices now ticking above 65. I said I wanted to buy this breakout at 65, but I'm a little nervous because it's so slow. There's no acceleration to it. So, I don't love that. And then, gold looked like it was breaking down and it reversed. I guess why does that have an inherent bid if everything's so good? And why is oil ticking up? And why is bond? Like if
Because
you,
it's actually not because actually not everything is so good. It's just that the market thinks it is for right now. The
I
fact that
understand.
gold is going much like higher and keeping these levels, that high is going to get taken out, right? I mean, so the
No, it
fact that
isn't. No, it is not.
well,
Okay. I know it's getting taken out. When? In what? In when? How long do you have?
okay, but if you're bearish on the market, why
Wait, how much
wouldn't
is
you be
gold? Wait,
bullish
how much
on
is gold up on the year? Let's see if you're in queue with what's going on here. Okay, I'm looking at my board.
twenty
There are
percent,
no,
30%?
yeah. Oh, that's not, dude. You're throwing 10% around like it's nothing. We just
Like it's
said
nothing,
the average
exactly.
return is 7%. You're 20, 30, 40, 50,
What, what
100.
what's
Dude,
another 10% for this market? Nah,
okay, well, it's 27%. It's
there you go,
and
right there.
what right, okay. So I don't think it's gonna take the high out. It actually looked like it was going back down towards the low. I'm just not understanding as yields are ticking higher, how could gold what makes gold better? And then on top of it, throw the currency in, which gold is priced, believe it or not, and this, gold is priced in dollars. So by buying gold, okay, and watching the dollar downtick 15%, you're losing 15% by buying gold in any other currency unless you're hedging. So I don't know. There's a lot of divergences out there. One thing I want to talk about that looks really interesting, and it's on the stock side. I think Tesla looks really interesting here.
Yeah, I wanted to actually bring that up. Glad you did. What do you think?
Think lower. I think he's losing his footing. I think what's with the black eye? I think
I
you
love
know
it. I love the black
I
guy.
know
Him
him
and
and Dustin
Benedict
had
got
a
into
fight.
it.
Could you imagine what that must have looked like?
Oh, I wish I was there. That was something else.
I
It's
don't
kind of
know.
like good and bad. It's bad because it's chaotic, but it's good because I don't know. I just like it. It's good. I think it's good
It's really
when people
good.
fight. Yeah,
So
when me and you fight,
Tesla
good
looks
things happen too.
Tesla looks like a short down to maybe 230, maybe lower even. But again, these trades are taking a long time to develop. Um,
Well, let
you
me ask
know,
you about Tesla, right? So there's that, right? Okay, he's losing it. People are calling him this and that. He's on this drug, on that drug. But in terms of why it fell 14% that day when they were going back and forth, which by the way, nobody's even talking about that today. Like it was a news item last Thursday, and now I feel like nobody cares.
no,
But
it's just ridiculous.
it's
It's
ridiculous. So, but how, as a percentage of their total revenue, government contracts are what, like not even 5% of their total revenue? So I don't know.
it's perception. It's not the actual revenue. It's perception of what will be, and how the company is doing. Company's not doing well. I don't believe it went from Elon being the greatest guy to literally being a freak. Okay, so I don't know what's going on. Again, the guy is an
I'd love to
absolute.
buy it. I don't know. I'd love to buy it, but I'd love to buy it at like 250, 270.
Okay, whatever, dude. Dude. You'll be sitting on the sidelines for a bit of time. We'll see. I think it's negative. It's interesting. There's a bunch of tech stocks that are negative today, and somehow the market is up. I see Apple up a little. I think that's probably a short. But again, being in short S&P and Nasdaq right now, I don't want to add to anything I have because it's just not not the right time. Um, so we'll
Yeah.
see. We'll see what goes on here. And there's a lot of external things. Keep an eye on the bond market. Obviously, we've discussed this. If we get to 455 on the yield, 460 plus is the next level, to see if we hold, and then 475. But when is asset allocators, okay, there's tons of PMs, RIAs, etc., that have models, and the models set them up to basically buy bonds and sell equities at certain levels. And earlier in the year, when we had the sell off a month and a half, 2 months ago, it actually swung the other way. So people were getting out of bonds to buy equities because that balance flipped the other way when the market was down so much. But listen, I know people don't want to hear it, but I think the story of the year has not been written. Um, I'm
Not by
gonna
a long shot.
I'm gonna have egg all over my face. People writing in saying I'm bearish all the time, and I'm not
But
bearish
it
all the
doesn't
time.
matter if we're bearish or bullish. That it doesn't matter. All that matters is how you trade.
100%. I mean, we trade every day with an opinion. We do spreads, um, but this year it's an interesting year for me because I was having the best year I ever had in the newsletter business, which means putting out trades to the retail public and subscribers. And now it's gone to a medium year from like the best year we ever had. So this little bump in the road has, caused a little hiccup. But again, I think we're going to see volatility in the second half, and I think we're going to see a lot of opportunity. You can't come in today on, today's June 9th, and, look at the market and it's just dead. Like, the market just has no movement. And, we've had this thing where we go down a little, and then rocket back up. So right now, the market has an inherent bid. Um, we're going to probably potentially test those high levels, which is only about 1.5% from here, which is nothing. And then we're going to see, what the market's made of. And again, we're only in the 6 month, we're halfway through the year, and the market is sitting pretty much unchanged, in general. Up small. All markets are up. Dow up 0.5%, Nasdaq up 1%, and S&P up 2%. But I do think there's going to be some trading opportunity. But I'm not seeing it like in the commodity sector right now. I know you're bulled up on gold. I'm not. I don't. I don't think. I think you know it's had a sick year and should go lower. You're thinking it's going to take out the high, so we're a little bit in disagreement there. Oil sitting on the breakout, but it's interesting. Oil is still down on the year, pretty good. So we came into the year at about $67, and we're $64. Is these markets overall, other than gold, I'm looking at my board, have not moved tons. There are commodities down 10%, like sugar. The ags are flat to lower. So really, like you said earlier, if you fell asleep and woke up right now, it's just a nothing year almost across the board, other than the outlier of some precious metals. Overall, the rest of the stuff is slightly lower. So we'll see. We'll see how things shape up. But I would keep an eye on Tesla today. That's going to be the interesting one. I'd like to know how Elon got the black eye. But if Scott
you
Beck can
think
punch him in the face,
the old hedge fund manager Besson gave him a left hook
yeah,
leading to repentance?
I highly doubt that. I would doubt that. But it makes for good. I would say TV,
I mean,
but it's
I heard Musk
internet.
tackled him pretty much, right? Wow.
Yeah, but I'm not understanding. He has the black eye now. He hasn't been in the White House in the longest time. So I don't know how he has a black eye today, but
There's a school of thought that says it's all staged.
why would it be staged? What is that going to do?
I don't know. Some some weird conspiracy somewhere somehow. Look, some people think that the world ended in 1999, so I don't know.
I don't I don't know what the conspiracy is or whatever, but the thing that I do know is that Scott Besson and Elon Musk haven't been together in the last while. He's not sitting in the White House after he tweeted out all these things about Trump. He's not hanging around the White House. So I think it's all BS, but
Maybe one of Musk's robots had a programming error somewhere.
I don't know, but more on the markets. Really dead. Don't see a lot. Maybe look today at an upside call spread to sell. I don't think there's a lot in anything, and we'll wait to hear headlines to react to. Again,
What do you think about today's straddle? You think it's high or low? I think
I don't know. Did
last
you
time
price it?
like 33, 32.
It's a little higher than it was last week. Maybe it's looking a little bit. I don't think that hits on the upside, but you know, we'll see. We'll see what happens. Like I said, I may sell a call spread to the upside, maybe 25, 30 points out of the money. Probably not a lot in it. to start the day. But overall, I'm going to keep an eye on Tesla. There may be a trade there coming. Robinhood again is looking fairly frothy. I think a lot of the run up was the addition, thinking it was going to be added to the S&P. It wasn't. It's
Yeah, a
coming
lot
in.
of a lot of the stocks that people were thinking were going to be in the S&P are down today because none of them were.
Yeah,
Uh,
but I don't know. I mean, eventually this stock is.
AppLovin is another one. APP, AppLovin, my favorite LNG. How do you pronounce that? Chenier. You're
Chenier Energy.
okay. So that one's down. Robinhood is down. All these stocks were slated to potentially go into the S&P, and S&P took nobody
I don't know. I don't know why. Why would they think they were going to be added?
due to their financial merit.
Yeah, I don't know. And the S&P isn't kicking companies out left and right. I mean, I don't know. Eventually, these companies will be added at some point. I mean, so if you're playing for an add delete, I mean, I don't know why. I mean, Robinhood's come back. It's only down a couple of bucks, but eventually that's going in the S&P. So I'm sure it'll be, you know, here or higher when that happens. But we'll see. So today I would keep an eye on the bond market, not really moving much, but if it gets a little iffy, maybe they come to sell some S&Ps around that. If not, S&P has an inherent bid. It seems like it's been the same trading every single night here. The market's lower overnight, and then you wake up in the morning, the market's higher. It's literally been every day for like a month straight that this has happened, where we've been down anywhere from 5 to 30, 40 points, and then you come in and they buy the market. So maybe having an up opening, which we don't see a lot, maybe it'll be a fade. But overall, quieter all around. Not a lot of movement in the dollar. Quiet there. Bonds slightly lower, but literally unchanged to the tick. So a quiet Monday morning. I don't know if you see anything else you want to talk about, but I'm pretty.
Yeah,
Well,
metals continue to be interesting. We were talking about gold a lot. I think what we haven't talked about at all was silver, which is threatening now a multi-decade breakout. You got to take a look at that. We're talking about multi-decade. So I think that's a significant thing. What I've noticed is some rotation into things like SLV, maybe a little pause in GLD. Those ETF buyers are a big player in those markets. Obviously, central banks. I don't know if the central banks are buying silver, but I'm seeing a rotation
somebody
into
is. Somebody is.
somebody is. Somebody is. So silver is really kind of taking off versus gold. And then something I'm looking at a lot is copper. Chinese copper smelters are looking at a shortage. Um, so here comes copper again. So metals just continue all year long. I'm very active in those, and I'm seeing a lot of interesting stuff.
All right. Well, we'll keep an eye on that stuff. But overall, quiet all around. And keep an eye on Tesla today. I think there should be some action there. See if it holds. It's down about $6. See if it holds. Maybe trades lower levels here. Um, Again, I'm just looking at the board and I'm not seeing a lot. So I think quiet overall. Market wants to push it to the old high at minimum. So keep an eye on that. And I'm sure there'll be positive news out of the meeting in London, whatever whoever's meeting and whatever they're meeting about. So
You
we'll
never
see.
know.
We'll
They
see.
walked out of they walked out of the first meeting. Remember, they walked out.
No, they walked out, and the market sold off, and then they had a fake deal by the next day. So don't worry. This market has an inherent bid. So just realize that until the S&P probably trades 5,800, there won't be a seed change. So keep 5,800 on your radar on the S&P futures. Old highs up around 61 and high change. As the all-time high, which is really only about 1.5, 2% from here. And we sit and wait. Straddle is cheap overall, and I'm going to wrap on that. I wish everybody a great trading day. Eric, enjoy, and peace, everyone.
Take care.